When you go to sleep, do you know if your money is working for you? That's the goal of many people in today's world. In this video, we're going to be talking about investments and how investments can make money for you when you are sleeping. Today, we're talking about financial investments. What are financial investments and why are financial investments important to you? My definition of investment is anything that has a return. I get asked this question many times. When should I start investing? My answer is invest now. Ideally, it would be great to invest the day that you were born. After creating your budget and creating an emergency fund of at least $1,000 so that you could protect yourself from those Murphy moments that catch you off guard so you don't get knocked out, that is when I recommend starting. Here is the basic investment goal. Goal number one, investing in something that has a rate of return greater than inflation. The best example I have on return of investment is if you loan somebody $1,000 and within a year they come back and they give you $1,250, that is a 25% return on investment. The $1,000, the initial amount that you loaned to them, was returned to you plus $250. If you take $250 and divide it by 1,000, that is 25%. A 25% return on investment is wonderful. The value of money today will never be the same as tomorrow. Why is that? It is because of inflation. What is inflation? Inflation is basically the rise of prices. If there is too much money in the market, the rise of a particular product is going to increase. That is just human nature. That's just supply and demand. The best example I could say over time why inflation is very dangerous to money if it is not invested properly is in 1995, when I was working at Neiman Marcus, this particular Mont Blanc pen retailed around $140. I could be off, okay? But I remember it was in the $100 range. $140 range, for example. Fast forward to today, this same Mont Blanc pen, which has not changed that much, brand new, retails right around $400 at the Mont Blanc store in Scottsdale, Arizona. Let's talk about forms of investment. What you see in here today in the news, or if you read the newspaper or you're surfing the website like the Wall Street Journal here, a form of investment can be a stock. A form of investment could be gold, for example. You hear gold prices going up and down. The hottest form of investment right now is cryptocurrency, Bitcoin, Dogecoin, NFT. Another form of investment is real estate. You hear people talking about buying land, sitting on it, and waiting for that land to appreciate so that they can sell at a higher price. My favorite form of investment that I like to talk about and I encourage people to learn more about are mutual funds, because if you watch the news, if you see the tickers, there are hundreds, thousands of mutual funds out there. I recommend it because that was what was recommended to me, and I've got experience with mutual funds because I own several mutual funds. So in this video, I'm gonna show you what mutual funds are. I'm gonna show you why I'm a big proponent of mutual funds and why I recommend it to my kids, especially the ones who are graduated from college or will soon be graduating from college. I believe, as an owner of a mutual fund, that it is one investment of many that will be able to help you get a rate of return in such a way that when you go to bed, when you're traveling, you know that your money is working for you to make more money. We're going to be talking more about mutual funds, the bare basics. I won't go into depth with them, but my goal is by the end of this video, you have a basic understanding of mutual funds and why I believe mutual funds are a major component that people should have as part of their financial investment. Let's take a look at a mutual fund portfolio. I'm showing to you an account that I own. You'll notice at the very bottom of the chart here, I started investing sometime in 2003. I started with $150 for that initial investment, and then from there I did automatic deposits into the mutual funds for $100 per month. Over time, as I started purchasing more shares, the value of my account for my kids started growing. You'll notice the dashed lines, those dash represent the net investment that was originally put in. And then as the mutual fund started performing, paying out dividends and capital gains, the more shares that I own, the more the value started to increase as far as a rate of return. In addition to that, the actual share price per value started to increase too over a period of time. Now, being that said, this is a disclaimer. Investments are risky, and with any investment, you can have your ups and your downs. Let me show you what losses can look like. Here I'm showing you losses back in 2011. Yes, I did have losses for these mutual funds. Let's talk more about the portfolio value history. Here I'm showing to you that over the period of time since I started investing, the gains for all the mutual funds for my two kids equal roughly around $38,000, okay? Now, you notice that I started with $150 at the top. I put in $18,850, and over the years, minus whatever was withdrawn for college education, etc., the amount of gains is roughly $38,000. Let's take a look at the rate of return for one of my kids' set of mutual funds. Right now, since I first bought into these mutual funds, their combined return of investment is 10.41%. For the year to date, this is 2021, it's 3.52%. This is amazing because it is beating inflation, which is running around 2.4%. So that's a good set of return. Let's take a look at the transactions for one of my kids' mutual fund portfolio. This portfolio has two mutual funds in it. You'll notice that there are dividends and capital gains being distributed. You'll notice the share balance here. As I'm investing or putting in $100 every month, those amount is being split into two accounts. As a result, every kid every other month is going to have $50 to buy one share from Fundamental Investors, one share from the Growth Fund of America. Here I'm highlighting the sales charge. This is something that I get charged because the sales charge is going to go pay for the mutual fund company, to pay for the analysts, the researchers to go find the best assets, companies, stocks to buy, so that I can get a rate of return that is more than inflation. You'll also notice here that for $50, I'm able to only purchase less than a share because the share price per fund here is $66 and also $55.13. So instead of getting one share, I'm getting a percentage, so 0.75 and 0.9. You'll also notice that I'm being charged $2.50. That is the 5% sales charge, okay? I mentioned that it goes to pay for the research, the team, the financial transactions that they're doing on behalf of me, all right? When you leverage a large organization who has the staff to do the research and buy things, you are now using your money so that they can actually make money for you. I want to highlight something on the screen right here as I'm moving up. You'll notice that there is a capital gains distribution of $118. Well, in this transaction, I'm showing you the power of buying into a mutual fund where the mutual fund companies are doing the research, investing into companies, stocks, and other assets. When the mutual fund company does their job, and granted, there's always ups and downs, when there is an abundance of returns, be it dividends or capital gains, the mutual fund companies will then pass it to us, to you. As a result, you'll be looking at your statement, you'll be seeing that yes, you are investing monthly. More importantly, you'll also start to see that on good years, that dividends and capital gains will be distributed to you. As I transition to the dividends and capital gains summary, you'll notice instead of looking at each line item as far as when dividends and capital gains were distributed, if I were to put a line straight down, you'll notice that in 2020 for capital gains across these two funds, capital gains were $651-ish and $185.44-ish that were distributed to the mutual fund accounts. Now you'll notice that in 2021. It's early in the year. There has been a distribution of roughly $25.82. That's not bad. I look forward to mid-year and later in the year when I'm crossing my fingers and I expect positively that the capital gains and also dividends will be distributed. Now, as I highlight the dividend section, this is just an explanation of what dividends are. You can click at my description link and I'll give you a link to the description of dividends and capital gains. This is the bare basics. All right. We're at the tail end of this video here. I showed you my kids' 529 college fund plan. This is something that I bought into back in 2003 with an initial investment of $150. And since then, through recessions, through losing jobs, through working multiple jobs, I continue to invest every month $100 into their college funds. 2 kids, each one of them having a fundamental funds and growth of America fund. Okay. Now, with that said, every other month, each kid would get funded. I showed you their transactions, showed you the dividends that they were getting, and also the capital gains. The information here, is not normal. And why I say that is some years I've lost money. I've shown you that in the video. Some years I've made money. This particular economic run that we're in is fantastic, but there is absolutely no guarantee that it is going to go down because investments are inherently risky. With that said, if you can see that a husband, a single dad, could put in $100 a month over almost 18 years, and the money was increasing through dividends, capital gains, the number of share prices going up, okay? Imagine what you can do if you were, for your own financial planning, putting in $100, $200, $300, $400 a month, just for example, because history is 100%. I cannot guarantee the future. No company can guarantee the future. No financial advisor can guarantee the future. But just imagine $500 a month in. That is 5 times, let's just say 50,000, okay? That's $250,000. If I didn't have to take out $9,000, this fund would be close to 60,000. Imagine 5 times 60. That's $300,000 out there. If you have the ability to have Starbucks, if you have the ability to manage, save, scrimp, budget $100, please do it. All right. We're at the tail end of the video here. I hope you enjoyed this video. I hope my explanation and examples were very helpful.